All right, guys, welcome back to another video. Over the last 24 hours, Bitcoin has broken to a new fresh low. The 3-day rule has signaled yet another local top in the market, but we're seeing some signs of the market resetting, which is what I want to go through in further detail in today's video, looking at Bitcoin, cryptos, the stock markets, and of course the real estate cycle, but most importantly, for you guys watching Bitcoin and cryptos. Make sure you hit the like button, subscribe to the channel if you are new here, putting out daily videos on all of the markets to assess the macro cycle. Links in the video description as per usual, but make sure you do hit that like button. All right, let's kick it off with the agenda today. The last video of the year, super exciting times as we head into Q1, which most people think is going to be green. We'll wait and see to see what actually happens at that point in time. As I said, S&P 500, MicroStrategy is a big one. This one is something that we've been following on the channel, watching it break down, now down over 40% from the top, which in the previous cycle was an early warning sign, basically like a canary in the coal mine to suggest that the Bitcoin cycle was coming to an end. It didn't mean that there weren't further upside. There wasn't further upside prices, like new all-time highs for Bitcoin and for cryptocurrencies. However, there was a lot of weakness showing in MicroStrategy, and that's what we've identified here. I'll go through that in the charts. Crypto, Bitcoin, big one here on the 3-day rule, signaling a local top and looking at the reset of the market, reset of Bitcoin, reset of cryptocurrencies, and the time underneath the all-time high. No, it might not be what we had last time, 8 months under the all-time high, and it doesn't suggest that it has to be 4 to 6 months, but it did suggest that we saw a local top and we've had new, fresh low prices, now down nearly 16% from the top, down to $91,000 with the possibility of further to go to the next support levels. On top of that, USDT also signaled to us, as we've been following here, a top was coming for Bitcoin. It seemed crazy, absolutely ridiculous at the time because of how much hype was going on in the market. But again, this has been an absolutely standout chart that suggests and signals that there could be a reset forming in the market. It did it in 2021. You can see way back here on the chart, and it did it again. How much more do we have to endure to the downside? So with that in mind, let's go straight to the traditional markets, looking at the S&P 500 as it closes out yet another year. Tomorrow's video, I'll go through a outlook for January and Q1 for 2025. Yesterday's video, the big one, was around the predictions for 2025 and towards the end of the cycle. So make sure you check that out. I'll leave a link in the video description. Time frames are the big ones here with the S&P 500 dropping another day, 1.2% to the downside, breaking the short-term 50% level, which means we now have to reassess our 50% levels and look at the August low. But the big one here is the reset. So this is the theme of today's video, looking at timing to reset the market. Most people watching the market barely look back a few days, let alone a few years. So when we do take a look back at a few years, what we can see in terms of time to reset the market sentiment, basically going from tops to bottoms, you typically get some extreme fear at the lows, and for the stock market at least, it's had some extreme fear as it breached to new all-time high prices. Pretty crazy. But these timeframes continue to repeat, whether they're the set time frame of roughly 20 days, as you can see on my chart here, or multiples or divisions of that price, like we do with that time. So like we do with the price, we look at the entire reference range, and then we look at halves, so 50%, and we often look at 100% repeats, 150%, 200% repeats of reference ranges that the market has given us. So next we look for a time frame or a price point, or both, to project from to give us that next price target, that next time target to the upside, should we continue to see further upside. So that's exactly what we're doing now for the time frames. Looking back, as I said, 8 days to reset before another move to the upside. 18 days. You can see both of these here, and the stock market trades Monday to Friday with holidays taken off. The 18 days, the number on the side are the calendar days. So that's what I'm looking at here. 18 days, you have 12 days, 20 days, 20 days, 18 days, top to bottom. That was the Middle East conflict there. So it's 18 days, reset to the low, market worked its way higher into a new fresh price. Going back now to the beginning of the year, basically January 2024, you had another 20 days into a higher low, and to measure just to that low was 8 days. We've seen that before. So we're able to use that information, provided you're able to read what the market is giving you. Okay, the first big Middle East conflict going back to 2023, at least in recent times. Of course, we saw that every 6 months after that. We saw it in April of 2024, and then we saw it again in October of 2024. Another Middle East conflict there towards middle end of October. This time frame here to that first low out of the July top, that was 22 days, and then for the entire range was roughly 92 days. So basically, exactly a quarter of a year. Then we have the US debt ceiling crisis. You have 59 days, so 3 times what we're used to seeing, that roughly 20 days. You had 40 days here for the US banking crisis, the non-crisis. Everyone was up in arms about it, that it was going to collapse the market. Didn't happen, and that was a fantastic time to buy the low and ride it up, even though it was in the face of all of the wall of worry, everything bad that was going on in the world. US debt ceiling, people thought the US was not going to be able to pay off their debts. Well, the market boomed from there. The next reset time, 9 days, and then going back, we're into the bear market. So different conditions at that time. So I'm reviewing the conditions that we have seen in this bull market from the October 2022 low. Now, using those dates, and because we've already seen the shorter term time frame come and pass, 8 days was basically last week. We're now into the 14th day. So I'm looking out towards the 20th day, which if you look at the bottom here, you've got the 6th of January. So basically next week, possibility for a low, just like we've seen over the last couple of years. Now, if that extends out and it goes beyond that and the reset continues on, we would look to the next numbers, roughly around that 39 to 60 days. But for now, that's the target. We're still a long way from the 50% and the support levels back at 5,700, 50% at 5,600. It hasn't changed yet because the top has been in, so we've still got pretty good support to the downside for the S&P 500. The macro structure continues to remain, even if you get this correction back down to 56, 5,700 points, which would be a total correction of 7% up to about 8.5%. So 5,600 to 5,700 is 7 to 8.5%. Nothing out of the ordinary for the S&P. It's done it many times before. Could put a bit of a dampener into the January month. Could still finish green, of course, but there could obviously be some corrections into that 50%, which would be a good resetting point for the market. It's already done 14 days into that reset. As for the NASDAQ, the downside is still at 19,900, so the significant support level there from the August low to the top. The total correction would mean an 11.5% down to that price, if it actually gets down to that price. There's going to be bigger fluctuations here for the NASDAQ, bigger upside, bigger downsides as well. So you might get the double-digit corrections, whereas the S&P might just border on those high single digits or low double digits to get back to that price point. Support still intact, but in terms of the reset, you're definitely seeing that at the moment with the sentiment resetting. On top of that, MicroStrategy has had a pretty severe decline here. And when we talked about it back in December at this peak, I'll call them excuses because I know that sort of triggers the market. You do what you want with it. The excuses people give the market. And I don't say that lightly either, because it definitely comes down to how you read a chart and then how you put in your narratives, your headlines, right? They were saying that MicroStrategy was selling stock, which they were, and then they were buying up some BTC, and we've seen that now. Their average Bitcoin price is up to $62,000, but the MicroStrategy stock continues to fall. So maybe they are still selling, and it's going to continue to hurt the price. You're now past 50%. That was the key area we're watching, $320. So my story here is just follow the chart rather than the narratives themselves. If, in fact, this did hold out, next week you see a close back above, it holds above 50%, that could be a good sign that you're seeing the exhaustion of the selling. For now, as it currently stands, that's a close below the 50% level, which is rather weak. So what we looked at in the last cycle, back here, 2021, you had a MicroStrategy top in February, and then a lower top in April, and then a decline into that big low in May when Bitcoin dumped down to about $30,000, $29,000. The higher lows begin to form, and then you get into this final peak in November. Barely got above the April top, so call it a double top, with April there at roughly around $88, $89. I think there was some stock split since then, but nonetheless, you had the double tops there at about 89, or 89, 90 bucks. Then bear market comes through, wipes everything out into 2022. As it stands, not forecasting, not anything here now, as it stands, it is in the midst of repeating something similar to last cycle. As I said, it doesn't mean that Bitcoin is not going to print a new all-time high price. It doesn't mean that some stronger cryptos are not going to print all-time high prices. They definitely could. But what we saw last time with MicroStrategy is that when we got to that first big boom up, Bitcoin continued to go higher, not much higher, and MicroStrategy began to put in lower highs. And then the final top there, which wasn't much higher, was also basically a double top before it all came crashing down. So I'm using that as one of my signals towards the end of this cycle. Maybe it is soon. Maybe we're all round tripping it right now. No one knows for sure, and you won't know until much later on because macro cycle takes bigger time frames to change. Basically just looking at this as a possibility when we get into another top, if we get into another top, and MicroStrategy isn't able to do that, that could be another early warning sign because they hold so much BTC that investors are not seeing the upside in Bitcoin that I guess Saylor keeps talking about, looking for bigger and bigger prices. USDT has also bought up some more Bitcoin. So that's the USDT stablecoin that you know of. The company itself, Bitfinex, has bought up some more BTC, roughly 7,630 Bitcoin. I know people like to call this, whales loading up. It's all great things coming through. Maybe it is. I don't really care. But they have been buying. That's the fact. There's money out. Bitcoin has been bought, at least if we can consider this a fact, okay? The other thing with USDT is the FUD against USDT in Europe. So MICA threatens USDT's future in Europe as potential ban looms in 4 days. Next, 15 hours ago, Tether faces EU regulatory hurdles. USDT market cap drops 2 billion. And then, 7 hours later, 8 hours ago, big breaking USDT delisting news. What you need to know, yada yada. Okay, so breaking USDT will be illegal in Europe in the next 3 days. So whether that's taken effect by the time you watch this, another story. But it seems like it's Europe is doing all they can to not make it a free place for people to trade over there. Now, if you are new to the market, that might sound like doom and gloom. It might sound like FUD. The seasoned guys, you'll see them in the comment section. They understand that this is all part of the cycle. Typically, when you see the markets going down, you'll see more bearish headlines. People will stick to those headlines more. They'll believe them more, especially when you get towards lows, which is why I started the video with the resetting here and just looking at pure timeframes as to what's happened in the past to traditional markets, which have been around for decades upon decades, even hundreds of years in some cases. And you get to these lows like the Japanese yen carry trade we saw in August, super fearful. Everyone thought there was another recession back on, or at least that's what the analysts were writing in their headlines. It's back again, that's it. 2024 was the top, market's going to crash. And guess what? It was the low. It happens almost every single time. So in amongst all of the data that I'm giving you here, if we get to some of these lows and you see bigger headlines, some of these fearful things that come up, maybe USDT is part of it, it might be a good reason for another low to form, especially if the timing lines up, if the price support lines up, if the dates line up, if the pattern lines up, if all these things are lining up, yet the headlines are telling us one thing, probably best to follow what the chart is telling us. So let's continue on with the resetting sentiment that we're seeing across the board with Bitcoin and cryptos. We saw that pump up for the search volume, November period, Bitcoin getting to one of its highest points, then crypto following suit later, first week of December. We've seen that before as well. Last cycle, you saw Bitcoin rising up to some of its highest search volume, and crypto was still on the grind up. Crypto got to some of its highest search volume in May, and then Bitcoin peaked out once it collapsed, so everything started to come down in May. You also had a lower high here for crypto, another lower high, and Bitcoin basically had that one big pump there when the market came crashing down in June. But the top was around this part here. Yeah, November. That was your all-time high territory. So now we are resetting. The search volume for crypto and for Bitcoin is coming back down. I don't think it's the worst thing yet. We're definitely seeing a drop-off from interest. The place that I would be concerned is if we started to drop underneath some of the previous support levels. You've got these markers back here for Bitcoin around 1920, in the early 20s. So a long way off that at the moment at 32, and crypto is sitting at around 13. So the previous interest was at around 8, 9, 10 before we started that pump out. So provided the support holds with how much search volume is going on, you would anticipate that you'd see further upside. But of course, pay attention to the charts, most importantly when it comes to the price charts and the patterns that are following up there. So with this lack of interest for search terms for Bitcoin and crypto, we're also seeing a lack of interest in the exchange volume. So the 7-day moving average exchange volume, it is underneath the levels that I would consider safe, I guess, a bit more of a support here, and it's broken down from the support at about 80 to $100 billion. That is at now, the search volume, the exchange volume is at roughly around 60 billion. The previous area it was bumbling around was around 30, 40, 50-ish billion dollars. So it's getting rather close to the the exchange volume. I'll get that right for you guys. Getting back to the exchange volume of that 8 months underneath the old all-time high. So you don't want to see it break down from this zone here. 30 to 50 billion, probably the least you want to see it go, ideally above that 50 billion, and continue to consolidate between that 50 and at least 50 and 60 billion dollars. Apologies if I said million at all in that. As for the liquidations, as we just looked at, roughly around $280 million in the last 24 hours. Longs getting wrecked again. And the fear and greed index resetting here, still in greed after another day down, pushing to a new fresh low for Bitcoin. But we do know that this can happen. And if we do get a big flush out coming into this timing now, as I'll get to with Bitcoin in just a sec, we've seen that before. January, flush out. February, moves back higher, flush out in February again, a move higher, flush out in April and May, reset, and then the lower high form. So it did take a lot longer than what's happening at the moment. But yeah, we've been in that extreme greed now for a couple of months, or extreme greed for a month or so, but greed and extreme greed for a couple of months. And if the trend continues, we're on the verge of dropping out of that, getting back into neutral. So this is Bitcoin on the daily now, and it has just closed above the 50% level. So the 50% on the extension, that's this one right here. And the importance of that is that if we're going to get another couple of days bumbling around this 50% level, that could mean that we only have a little bit further to go. However, if it does break down from the 50%, and that's at 91,750, then there's a higher chance that we push to the mid 80s, maybe even the low 80s, somewhere around 83 and a half, 82-ish over the coming week or two, into that time frame of a corrective low. We're looking forward to next week for some sort of corrective low to this move. That could be where we find some lows come in, the reset to the market. It comes into critical support time frames, and again, yeah, another price support area of roughly low to mid 80s. Further to the downside, you've got roughly 79K, but one step at a time. We haven't even broken down from $90,000 yet. So one step at a time, and then we can still look to the next levels. So the 3-day rule did play out again. I have seen several questions, people thinking that this is going to be 4 to 6 months underneath the old all-time high because of what I was saying in early 2024. 3-day rule. It happens from tops and significant lows. It is an indicator to advise that you're likely seeing a strong change in trend. That is all. A strong change in trend. And the significance of this rule happening at these very key turning points. March was an absolute key turning point, and the 2 weeks ago was an absolute key turning point as well at $108,000, another Gann number there for you, because most people and the sentiment at the time is so extreme in the opposite direction. They are not looking at these very key signals that suggest you're probably going to see further downside and longer underneath the old top than you would anticipate anything prior to that. And on the breakout, the longest time underneath the top we saw, there's 22nd of November. It broke out 13 days later to give you the big liquidations day on the 5th of December. So that was 13 days. You hit the longest time under the top was about 13 days before it broke out. And then we got to the next top, and that was about 25 days later. But I'm interested in this 13 days because right now Bitcoin is at that point now. You're at 14 days. So this is the longest time Bitcoin has been underneath a top in this entire move after it broke out of the $74,000 top on the election day. So this is the significance of that rule, saying that probably it's going to take longer to recover from this move, especially after the extreme bullishness we have seen. The good news is the reset is on. The reset is happening. We're watching the prices unfold here. We've got support levels to the downside. And if anything breaks down, you start to see closes underneath $73,000, $74,000, which are those previous tops. That is a sign for concern. It's not the end, but it is looking like a very weak market if that happens. So it's not the end of the world. It's just to tell you that these are significant turning points and that all of the sentiment that built up at that time is likely unwarranted, just like it was in March. Now, if you see this in reverse, you see it at the lows, you see those nice 3 days up, and you've got a massive fear going on in the markets. The narrative is just completely bearish. It's impossible for the market to go back up. It needs to see further downside first. And you see this signal, it's probably telling you that the downside is exhausted and you might see higher prices. So it works in reverse as well. The only difference here is that we've seen it mostly happen from tops. We did see it once in May here. This is May 2024. You had that big low that came in, a very significant low to the market inside 1 to 3 days up with higher highs, higher lows. And that held the market up for quite some time. There's the low. It only broke down 65 days later. So 2 months it took to break down from that low after the signal. Now there's heaps of back testing we can do with that signal, but we'll leave that for future videos. Otherwise this one will again go on for a very, very long time. Looking at the weekly chart now for Bitcoin, it's into its third red week, which isn't a great sign. However, as I pointed out with the price targets, there are still some good support levels down below in the mid 80s, and I'd say worst case scenario into those 70s. One big thing that people are looking at in the high 70s is this gap. It doesn't mean that the gaps have to get filled. Plenty of times that gaps have not been filled. One case that I can quickly point out is March 2023. The gap was not filled there. And if it's not filled, like it was here either in September 2024, probably means that it's a strong market. Much, much stronger as well. Now you do get the gaps fill, big pumps up, and then the the price retraces from there. But you can see it was such a big a sign of strength from around that 52, 53K level. It doubled in several weeks. So the market doubled from that point into new all-time high prices. So even harder to double when the market gets higher and higher. So that price range you're looking at is around $77 up to about $80,000 on the futures chart, which happens to perfectly line up right dead through the middle with the 50% level. If it were to get there, that's about a 27% drop from the top and currently at about 16%. So not necessarily that much further. If you take it from the closing price down, it's about a 15% drop. So down 16% already, maybe it's another 15% to that 50% level. They're just maybes, and just looking at the price targets there doesn't mean it necessarily has to happen. Something that you might want to close your ears about here, especially if you're an up only and you find it difficult to hold two positions in your head, a short-term bearish and a long-term bullish. If you're unable to do that, probably best you tune out and wait to the next section of the video, the monthly bar for BTC does not look favorable whatsoever. Big move to the upside, rejected heavily, less than 24 hours to go. At the moment, if it were to stay as is, that's a rather low close on that bar. So it's a reversal bar. If you guys are used to your candles, here we go. That's a very big reversal bar or reversal candle there. High move up, big slog back down. So big sell-off. Doesn't mean it has to be the end. You can see it happened in November of 2021. You'd normally like to see that go a little higher than the top of the previous candle. Doesn't mean it has to be the end, but it could spell a longer correction than many are anticipating, which wouldn't be the worst thing in the world. You might end up getting slightly lower prices here into the 80s or who knows, high 70s, and then start to work its way higher over the course of Q1 and Q2 to hopefully come back later in 2025 and put in new fresh highs. But as it stands, just as it is, that isn't the greatest monthly bar that you want to see for Bitcoin. So I'm going to do an update on that later this week, looking at January and Q1. So make sure you are subscribed to the channel, like the content if you want to see more of it. And in that video, I'll also go through the forward return dashboard for Bitcoin and the stock markets as well, and as well as the 18-year cycle for 2025. Okay, so USDT is the big one here that has been helping out very well. The update here is that we're on the rise yet again. So basically more dominance flowing into USDT, which essentially means less money into Bitcoin and to altcoins, primarily the largest ones. At the moment, 31st of December, the volume is increasing, but we need to get a reading of this at the end of the day. Generally lower volume overall through Christmas and New Year's holidays. The support level, 4.2%. The next resistance levels at around 4.6. We've already been rejected at 4.6 once. The two levels above 4.6 and 4.8, this would be where I would look for the market to reset. Ideally get rejected there, being major 50% levels, and then start to work its way back down over the course of January, February, March. And ideally, if we are going to see any sort of very significant alt season and Bitcoin, ETH, Solana, whatever, XRP season, 3.7, 3.8 needs to be broken down. That would be a lot of money back into Bitcoin and cryptocurrencies. But as it stands, it's on its way up. That's the trend right now. You're seeing the days head higher. If it is going to get there, that is going to be another pretty hefty hit to Bitcoin and cryptos, especially if it's going from 4.4 anywhere up to like the 4.8, maybe even to the next levels above the 50% at around 5%. So that would be like 0.5% of all of the markets going back into USDT. Pretty severe declines there. But at least that is just for the short term. What you need to watch out for, so I don't want to make it any too negative, but it is your money. You do what you want. If you only want the positive, go and check out the Hopium BS channels. If you start to see this chart hold above 4.6, 4.8, you get this breakout, it comes back down, and it holds there, that period is going to seem like the show is back on. It's going to seem like the altcoin season is on. It's going to seem like Bitcoin's heading back up, but this is going to be the key area here. If it holds support here and starts to work its way higher and start to break out of any highs that are formed there, that is severe times. That would be probably the end of the cycle there, or at least a pretty severe drawdowns across the board if this was to get back up, and then it could work its way back down, which it's a long way off. I'm doing a lot of ifs then because there's not enough information that's come through. What I'm trying to do is prepare for any sort of scenario that happened to be a break of the 50% levels, a retest, and then it starts to work its way higher there. That's the bit to prepare for. That's where you want to be protecting your positions. Just to finish on the Hopium side of things, you see it come up to 4.6, 4.8 and break back down. Get your moon caps out and all sorts of extreme excitement. We're back on more or less until we break down 4.2% and then 3.7%. Okay, total market cap still in a reasonable position here. Hasn't broken down from $3 trillion, which is the previous top. Even if it does, you've still got the 50% level back at 2.7 trillion. You still have plenty of other support back down at 2.4, 2.5 trillion. So with all that in mind, I know it's sort of a bit fearful. Just to be prepared, the total crypto market cap is still not in a weak position. It still looks relatively okay as it stands today. Plenty of support to the downside. And ETH BTC is still trying to work itself out here, whether it's going to form a base and start to work higher. The levels are still in play. Needs to get back above 4%. And for the overbalance in time and price, 4.6%, right around this line. All that means is that we would start to see more money flow out into ETH, and you'd basically have one very firm confirmation, not all of them, but one firm confirmation that you're seeing an overbalance in time and price for the ETH BTC, which generally suggests you will, over the longer term, see higher prices. Doesn't mean it's going to go straight up, because it could hit the overbalance and pull back just like it's happened with Bitcoin, but you'd probably see higher prices over the following months from that period. So any pullbacks from that point, once the overbalance in price is met, is a buy the dip opportunity. That's what that means, and that's how you action the signals there. ETH USD in the short term still holding up above the 50% level. I am on the weekly chart here. The major 50% is at $3,100, so provided it doesn't close underneath the 31s, ETH USD is looking okay. If it does, the next levels are back to around 27 and 2,800. So it can still fall into this zone, still be okay, and work its way higher into Q1, Q2. And finally, you've got Sol here. A few attempts under the 50% level of 187, but at the moment, still holding above it. Almost looks like what's happening with ETH, or what did happen with ETH back here. Broke down, held out, and then broke back above. So if it's able to get above around 202 to 211, that would be the key areas for Sol, consolidate, and then start to work its way higher into a new all-time high for this next stage, if we get the next stage of the market. Don't forget to check out the predictions video. I'll leave a link to it in the video description. Like, subscribe. Happy New Year's to everyone. Let me know what you're doing. I'll leave a pinned comment down there for you. I'll be going to bed early, maybe watching some early fireworks with the kids, and doing it all over again tomorrow. Thanks again. Happy New Year's, and I'll see you guys at the next video. Peace out.